On March 21, U.S. President Barack Obama will visit Cuba. The trip will be a historic one because Obama is the first sitting U.S. president to visit Cuba since before the 1959 Cuban Revolution. The visit will be a political milestone, but Havana and Washington have a ways to go before economic ties are fully restored. The main obstacle to renewing economic relations is the U.S. economic embargo on Cuba. Although the president can move to slowly increase trade and financial transactions with Cuba through directives to the U.S. Treasury Department, the Cuban embargo can only be lifted by an act of Congress. Therefore, renewing trade ties with Cuba mostly depends on the political mood in the United States. The embargo will most likely not end in 2016. The presidential election and an opposition-controlled Congress will make that difficult for the president. Therefore, it will be up to the next president to determine what direction to take with Cuba. Additional rounds of negotiations will occur before any progress begins on lifting the embargo. The U.S. still has demands such as human rights, compensation for the expropriation of private assets, and discussions on extradition of wanted criminal suspects living in Cuba that will likely be discussed. Political issues like this will likely come up because individual legislators can delay any lifting of the embargo if they do not come up in negotiations. Even if the embargo is lifted during the next president's term, Cuba has some issues that could limit the ability of American companies to invest there. The Cuban system for awarding investments to companies is not transparent. General Luis Rodriguez, who is the son-in-law of President Raul Castro, essentially holds final say over who can and cannot invest in Cuba. The process for companies to enter Cuba also poses some risk, since an investment can succeed or fail at the discretion of a single powerful official. Cuba's dependence on Venezuela will also be a problem for potential investors. Cuba relies on Venezuela for the majority of its oil, which is used to power the island's electrical grid. With political turmoil growing in Venezuela, Cuba is falling under greater risk. Cuba's best bet is to slowly replace the heavily subsidized Venezuelan shipments of oil and refined products with more expensive shipments from elsewhere. But a sudden cutoff from Venezuela's oil would cause a severe energy crisis on the island. The Cuban government most likely lacks the money to pay for its energy needs at full price. Therefore, this risk will remain until the Cubans find access to additional capital or until Venezuela straightens itself out.